So real quick back to 45L tax credits. So again, I'm trying to wrap my mind, depreciation, deduction, credit. How's the credit work? Is this a long lasting, live on and forever, always good? Or how's this category work?
Credits can also move forward for 20 years. So you don't have to worry. You won't get money back once you go below zero, but you just hang on to them, use them the next year. I mean, they are going to offset your tax dollar for dollar. And if you have partners, if you have a partnership, it's going to flow down in the partnership allocation percentages to each of your partners to use.
So there's a concept of cost segregation. And when we talk about depreciation, recapture tax. Is that a factor in this too? Are we lowering our starting point of our basis for the gain in order to recapture? Are we looking at that in the long term as well for these categories and these incentives too, or is it different?
Yes. So when you're talking cost segregation and you're talking 179D, because it's a deduction and it comes off of your basis, it's actually in the form of depreciation, then yes, you're subject to recapture tax. 45L, they used to make you, so 2022 and prior, to reduce your basis. And now they've gotten rid of that for 45L, which makes sense, which is interesting because low income housing credit, for example, that credit is calculated on the basis. So by taking the 45L credit in conjunction with that and then having to reduce your basis, in effect lowered your low income housing credit. So they've done away with that, which is great for the 45L. But here's an interesting thing to think about with recapture. So if you hold your building long enough, so everybody knows we have the net investment income tax now, 3.8%. If you're passive, so there's ifs here because you talked about you being an active real estate professional. If you're passive, you're going to get hit with that. And so your recapture tax on straight line depreciation, which over a period of time is most all your depreciation, is 25%. And that doesn't get hit with the NII. But if you do capital gains at 20%, and then you get hit with NII, you're only 1.2% difference. So to be honest, I wouldn't worry too much about recapture unless you're going to sell your building in less than 5 years from the time you did your study.